Hello, everybody. This is Toni Turner, and welcome to the Market Now as of Friday, March 8th at about 2 p.m. Eastern. Well, U.S. job growth accelerated in February, but downward revisions to employment gains in the prior 2 months and an increase in the unemployment rate to a 2-year high of 3.9% suggested that the labor market was slowing. The Labor Department's closely watched employment report that came out this morning also showed wage growth cooling last month and boosted financial market expectations that the Federal Reserve would start cutting interest rates by June. The labor market is supporting the economy, which is outperforming its global peers, so that's a good thing. Okay, let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500. And it's kind of like the way the SPY goes is pretty much the mood and manner of most of, not all, but most of the rest of the market. So when I captured this chart today, you can't see it on the screen up here because in order to get this low on the screen, I had to fool around with the software. But take my word for it, when I captured this chart today, the SPY was trading near highs at $511.39. Now the intraday high up here today was $518.22. So that's our new intraday all-time high. Is $518.22. Now, if we look left on this chart together, as you know, from the October lows at $409.21, we had a kind of a downtrend here before that. In October 2023, the SPY made a low here at $409.21. And it reversed from its prior downtrend. And of course, this is when interest rates started coming down a little bit. So interest rates started rolling a bit lower, buyers started coming in, and the shorts started covering, which means the shorts were buying to cover their short trades. Since then, the SPY has moved up pretty dramatically. Excuse me, it moved up through its 200-day moving average, the black line, the 20-day moving average, the red line, and the 50-day moving average, the green line, moved up above those and then it moved up dramatically at first, then started walking up the 20-day moving average and moved above it in a beautiful uptrend very, very nicely. Now in January of 2024, it had to catch its breath. It got short of breath. It slid down below the 20-day moving average to about 467. But a couple of days later, popped right back up after that. And then a couple of weeks later, we had earnings season start. So that was a lot of fun. Excuse me. Then it moved again up and walked up the 20-day moving average through January, through February. And notice how each time it comes down to the 20-day moving average, then it moves higher again. I always liken moving averages to stair steps. That price is like our legs walking up the stairs, and in this case, in a very nice uptrend, the moving average is like the staircase itself. Right here was when NVIDIA was coming out with earnings, so it gapped up. Then the SPY moved back down a little bit again, and now it's getting a little bit, tiny bit, I'm going to call it disorganized until today's price. So again, when I capture this chart at $511.39, nothing to feel badly about here. This has been a beautiful uptrend from the October lows to where we are now. The SPY has had a 26% gain, so that's really, really good. Now, most of us are wondering, of course, we have to, if the market needs to take a breather in the next couple of weeks. And for long-term investors, that's not a bad thing, but for some of us short-term traders, we have some trades that we like to take profits in near the highs, not when they pull back. And believe me, nobody is going to ring a bell at the top here. So in looking for clues, I did what a trading teacher taught me many years ago, and I think I've told you this before. When I was much newer in this industry, I was learning how to trade. I was in a office room with an old-time trader and who was teaching us, and of course a few of my friends. And he always yelled at us, and he always said, back up, and look at the big picture. And he said, get up out of your seats. Now back up from the chart. Now look at it. Does it look any different? And you know, I have to say that over the years, sometimes when I've done this, I've seen things that I haven't seen when I'm sitting close up to the chart, which of course is usually all the time. So I would look for different clues about what the market could do here. I see a little volatility coming in, but backing up, and this may be hard to notice if you don't, but if you look at the volume here, the volume from about mid-February to where it is now, and then kind of look left and see what the volume was just overall in comparison to right now. And what I'm seeing here is that it's not real obvious, but it's there that that volume is softening up here. It's not quite as strong as it was in the beginning of February, January, December, and so forth. So, and what I do know is that new highs on low volume, and it makes sense, right? Not as much buyers are there, as many buyers are there, could suggest that price needs to take its breath a little bit. And as I was thinking about the volume signals, I thought, by the way, on ToniTurner.com, you can find my online training program on volume signals that shows you how to read them. You could read volume signals, and that, of course, helps you trade better. So I thought I'd throw that in. Back to our chart, it will be interesting to see how the SPY trades in the coming week, whether it needs to drop back down to its 20-day moving average, which is coming in right now at $505. And it's used this for months and months and months. So can it stay above this 20-day line right now? Maybe it needs to sidestep for a little bit. I am bullish in the long run, but I am tightening my protective stops on my short-term trades, particularly the tech trades. Our next chart for the day, speaking of tech trades, is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this represents the NASDAQ 100, which is composed of the top 100 non-financial companies by market capitalization in the NASDAQ 100, including many of the much talked about Magnificent Seven companies, including NVIDIA, Meta, Amazon, Microsoft, and so forth. Now today, when I captured this chart, the QQQs were trading down here at about 437, down slightly from its all-time high earlier today at $448. The all-time high today was $448.64. So if we look left on the chart again, we'll note that the Qs, they had their October lows just like everybody else did. And the Qs rallied out of its October low. It came down here almost to the 200-day moving average. So we know the Qs was a little stronger than the SPY because the SPY fell below its 200-day. The Qs were up here and did not fall below their 200-day on this October low back in 2023. So the Qs rallied out of its October low at $342 atop the 200-day moving average. Then reversed here, broke through the 20-day moving average, the 50-day moving average, climbed up above price resistance at 373, up in here, up above these highs, ran up, made a gap, really ran higher here, the Qs did, over the 20-day moving average, and kept galloping higher. Lost its breath in January here, so did the SPY, just for a few days. It had a January little low here down to 395, but no worries, within 3 or 4 days it's back up again, and kept climbing up the 20-day moving average, as you can see here, Then right here, you can see where it popped up on NVIDIA's earnings. You could see it on the SPY as well. Of course, that company is in both indexes. Then walked along the 20-day moving average to where we are now at about, well, it popped up to the intraday high. And I had that here at $448.64. It's come off of that since, back down here to about 437, 438. So at any rate, from the lows, from down here at the lows, the Qs, since they made that October lows, it's gained 29%, nearly 30%. We can't argue with that. That's really a good uptrend. Now, we see nearby price support here at the 20-day moving average. That's at 436 right here. We have a pivot here at 425. We've got the 50-day moving average coming in at 424. So we've got a lot of potential support here. Do you think that the techs really maybe need a little breath here? And I'm going to say they do, simply by looking at how high they were trading over the 20-day moving average before. Big steps, but then the steps got smaller as the staircase kept going. The legs got tired, the price got tired, and now it's barely making it up and up and up and down. And of course, we're getting out of earnings season too. So, and price is showing a bit more volatility in the last few days. So, just saying, don't know what's going to happen next. Nobody does. But for short-term traders, it might be a good idea to raise protective stops here, especially on tech stops. Our final chart for today is a daily chart of the Select Sector Spider Energy ETF, the XLE. The XLE has 23 holdings, including Exxon, Chevron, ConocoPhillips, EOG, and Marathon Petroleum. And something I want to tell you while we're at the top holdings, when we talk about ETFs, if you say, well, Toni, I'd rather trade an individual stock, that's fine. What you can do is go into these ETFs, go to the website, in this case, Select Sector Spiders, go to the website and look at the top holdings for whatever ETF you're looking at and see, and then put the top holdings on charts, like put on a chart here of ExxonMobil, put on Chevron, put on ConocoPhillips or EOG or Marathon Petroleum, and see if you like them better. Obviously, ETFs are a little less volatile because they have some stocks taking them up and some stocks taking them down. So, of course, it's not quite as, although back here we had quite a quite a time. But usually they're a little more, ETFs are a little, not quite as volatile as individual stocks can be, but certainly look at the top holdings, see if you like them. Now, what we know here is that the XLE made a recent high in September in 2023 at right up here at $93.68. Then it dipped, then it rallied. Then it dipped down here, then it rallied higher up to 93, then it tumbled down here to 85, down below the 200-day moving average, then it wandered around and finally rallied back up to 93, so it kind of made a double top here, even though they were lower highs than the prior one. Then finally dipped all the way down. It came back down here to about 84, 85, then wandered around for a while, didn't go anywhere in particular, went sideways, came down, rallied back up, walked along the 200-day moving average for a while, then fell down here to January lows at $78.96. So obviously it would be nice if the XLE had a little more orderly pattern, and that's what I'm looking for. And with everything else so overbought, and I wanted to find a sector that maybe had a little more energy, pardon the pun, in it, at least appearing to right now. So again, it came down to January lows at $78.96. Then it rallied back up to sit on the 50-day moving average in January and February. That's about at 83 and 84 is where it was here up to about 85, trading in a range between the 50-day moving average and the 200-day moving average. Then it broke out. And what I'm seeing here that I like, and it gradually walked up to where it is today, trading when I captured this chart at $87.66. What I like here is what I can see that I'm sure you can see too, is kind of the makings here of an inverse head and shoulders, which can be a bottom reversal pattern. So if it breaks out, there is that part of it. If it breaks out, the neckline would be about where I'm drawing this line. So it has broken out here. It hasn't risen dramatically, and you'll say, hey, Toni, speaking of low volume, and I'll say you're exactly right. It does have low volume here. However, it is low, but since price is climbing, at least in this breakout, there are more buyers than sellers now. However, I will start small to reduce risk when I buy into this, because I do note the small volume. I do know there's more buyers than sellers because it's moving up and it's not potentially at the top. Certainly it's not back to where it was back about 93 in September. So to reduce risk here, as long as it behaves the way I want it to, I'm going to start small again. I'm going to start small to reduce risk. So in the coming week, if the XLE remains above its 200-day moving average, now that's the black line here, it's coming in at $85.02. If it remains, it's at $87.66 right now, so if it remains above, call it 85, I will add a small position to my trading portfolio, and I'm going to have a firm stop to start with at $84, and that'll be below the 50-day moving average, coming in at $84.15. So I will add a small position to my trading portfolio as long as it stays above $85. If and when it climbs above 89, and if you look left, I don't know, but I can draw a straight line, but that was prior resistance back in September, was at $89.90. So if and when the FLE can climb above that resistance level, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the XLE in the coming week. And now, if you'd like to become a more successful trader, this is a great time to check out my online training programs. You can choose from 10 different programs, including the one I just talked about, that is Volume Signals, a really good one. We have our popular flagship product, 7 Steps to Successful Trading. You can learn how to swing trade, which is great in this market, trade the trend to profits. I love that one. It's not as much work, and you can just trail a stop. How to read charts, great for novices and even intermediates who want to check up on what they know. 3 winning setups, good for short-term traders. And Bottom Fish Like a Pro, which is always one of my favorites. These programs will show you how to elevate your trading skill set and how to increase your gains quickly and easily. Check out all of my online training courses by going to their link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.